Okay, so good evening everyone. This is Arun Mantri this side. As you can see in the slide, the first slide, it is today's topic is intraday trade setup in Bank Nifty 1. Please focus on the tagline. It is intraday trade setup in Bank Nifty, and there is a suffix which is 1. That means this is only the start of this topic, and we will cover this topic in next 2 or 3 webinars so that the total intraday setup in Bank Nifty is completely understood. So today's topic will be a kind of basic topic on how to track Bank Nifty and how to track the first step to trade in intraday in Bank Nifty. So we'll discuss 3 to 4 steps that what you have to see when you are trading in Bank Nifty. So before going into the trade setup, let us discuss something about the Bank Nifty constraint. So before that, I would like to thank Mr. Santosh Komri Shetty, who is the branch head Hyderabad, who has given me this wonderful opportunity for the third time to present some knowledge sharing sessions with the people pan India. So I thank Santosh Komri Shetty for this because he has been very active in this kind of webinar, and he told me to take a webinar on Bank Nifty in 2 or 3 sessions so that the person who is attending this webinar will have a total clarity that how to use spider, how to do trade in Bank Nifty, and how to specifically do an intraday trade. So I'd like to thank Santosh Komri Shetty for this. So let us start. So before going into Bank Nifty setup, let us discuss something about Nifty and Bank Nifty. See, Nifty, everybody knows there is a 50 stocks in Nifty and there are only 10 stocks in Bank Nifty. So tracking Bank Nifty is a bit easy because you have to track only 10 stocks. But if you want to trade in Nifty, you have to track total 50 stocks, and 50 stocks are also from the different sector. So many people, they have a dilemma that Bank Nifty is more volatile, Bank Nifty is very hard to trade, but it is not like that. Bank Nifty is easy to trade than Nifty, but it is more volatile. That is true. It is more volatile because the constants are very less. The constants are very less. Even a 2 to 3 stocks in Bank Nifty can take Bank Nifty on the either side. That is absolutely true. Bank Nifty is more volatile, but it is not easy. It is not very hard to trade in Bank Nifty. It is very easy. The only thing is you have to know the constants, you have to know the basic techniques and how to trade in Bank Nifty. Those techniques, those 2 simple steps, there are only 2 simple steps in trading in Bank Nifty. In intraday, if you get those 2 simple steps, then it is very easy for you to even trade Bank Nifty in intraday. So this is about Bank Nifty and Nifty comparison. Nifty is having many sectors. It is globally tracked. It is diverse in nature and it is less volatile. But in the case of Bank Nifty, it is having only banking stocks. Those are more volatile and those are easy to track because there are only 10 stocks. See, what is the importance of Bank Nifty? Again, in Bank Nifty, you can see there it is comprised of only banking stocks. There are 2 types of banks, private banks and public sector banks. But many people, they don't know that private banks are having the highest weightage in Bank Nifty and public sector banks are having the lowest weightage. Now, in private banks, they are majorly, you can say HDFC, ICICI, and all those banks are there. But in the case of PSU banks, the only stock which is having the highest weightage in PSU banks is SBI. So Bank Nifty consists of both private and public sector banks. We'll go to the list also. So here you can see the weightages. The HDFC, ICICI, and Kotak, Axis. The top 4 banks almost contribute around more than 70% to the weightage of the Bank Nifty. So this is clear now that if you want to trade in Bank Nifty, you have to have focus more on private banks rather going into the PSU bank. So let us discuss in detail about this. See, this slide is completely very understandable. In Bank Nifty, 48% weightage is taken by HDFC Bank and ICICI Bank. That means 50% of the movement in Bank Nifty is because of HDFC and ICICI Bank. So many people, they don't. What they do is if they see movement in Canara Bank, if they see movement in PNB, if they see movement in Federal Bank, then they will go and trade Bank Nifty on behalf of that. Suppose the Federal Bank, PNB, and Canara Bank are moving higher, they will see that Bank Nifty will also move higher. But that is not the right case. If Bank Nifty has to move, HDFC Bank or ICICI Bank or both have to move higher. Otherwise, Bank Nifty will be stable or will be flat. So don't get into dilemma that if small stocks, small banks are moving higher, Bank Nifty will also move higher. The first thing what you have to do in intraday trade is whenever using Spider or any other software, probably I will go for Spider because I personally use Spider software. Always have a HDFC Bank and ICICI Bank chart along with Bank Nifty chart. If there is a positive movement in ICICI Bank and HDFC Bank both, then you can say Bank Nifty is likely to move higher. Reciprocally, if HDFC Bank and ICICI Bank are moving lower, then you can imply that Bank Nifty will also come lower. So that is clear. If you want to trade in Bank Nifty, also have chart of HDFC and ICICI Bank. This is the first step what I wanted to discuss. You can write if you want. Always have a HDFC Bank and ICICI Bank chart with you. I am talking about intraday chart, not positional chart, because today's session is purely on intraday. So whenever you want to trade in Bank Nifty, open HDFC and ICICI chart both along with Bank Nifty chart, because 48% of the weightage is taken by the HDFC and ICICI Bank. Now coming on to the other banks, the remaining 41% weightage, that is after 48, the 41% is weightage is taken by Kotak Bank, Axis Bank, and SBI. So once you are gone through the HDFC Bank and ICICI Bank chart, then open the chart of Kotak Bank, Axis Bank, and SBI. Because the remaining 41% weightage is carried by these three banks. If you are not sure about ICICI and HDFC Bank, if there is some confusion, then come to Kotak Bank, Axis Bank, and SBI chart. If there are more positivity in this chart, then you can go on long on Bank Nifty. When to go long on Bank Nifty, we will discuss in the next slide. But that will give a clear idea whether you want to go long or you want to go short. The second step is, after seeing the chart of ICICI Bank and HDFC Bank, open the chart. If you are confused, then open the chart of Kotak Bank, Axis Bank, and SBI, because these three banks carry more than 41% weightage in Bank Nifty. So if you are thorough with these 5 charts in intraday, you will get easily good movement in Bank Nifty, and you can easily have a big trade in intraday as well. So again, I will repeat: first HDFC and ICICI Bank chart you have to look. Next is Kotak Bank, Axis Bank, and SBI. These 5 stocks collectively they contribute around 89% of the weightage in Nifty. The other stocks, what I will recommend is the remaining 11% stocks. You straight away ignore those stocks, because those stocks will not have any major impact on the Bank Nifty movement. I'm not talking to ignore for cash trading or other trading. I'm talking to ignore for the Bank Nifty trading, because if you want to trade in Bank Nifty, no need to see the other stocks remaining other than those 5 stocks, which is HDFC, ICICI, Axis, Kotak, and SBI. If you want to trade in Bank Nifty, these 5 stocks you have to definitely see the chart. Depending on the movement of these 5 stocks, Bank Nifty will move on the other side. So this is the one which I have to discuss. Now coming to the next slide. This is a summary of all those 3 slides. That is, first you have to track HDFC Bank and ICICI Bank. Second, if you are confused, I am repeating once again, if you are confused, then only go for Kotak, Axis Bank, and SBI. If you are convinced that HDFC Bank and ICICI Bank are more likely to move higher, then directly you can go and take the trade. But if you are confused, if HDFC and ICICI Bank are not showing any trade signals, then come to Kotak Bank, Axis Bank, and SBI. 99.9% you will get a clear signal once you track these 5 stocks. Remaining banks, I will suggest you not to track. That is why I kept it on red. Don't track those stocks for Bank Nifty. Track only these 5 stocks. See, there are frequent doubts in the minds of Bank Nifty traders that why Bank Nifty is more volatile. That is, I have already told. These 5 stocks are only driving the Nifty. If suppose there is some high movement in any of these 3 stocks, then Bank Nifty can be more volatile than Nifty. But in the case of Nifty, you can say if Reliance is moving higher, Bank Nifty will not move. If IT stocks are moving higher, Reliance will not move. If IT and Pharma are moving higher, Bank Nifty will be stable. So there will be kind of index management in Nifty. But in the case of Bank Nifty, index management is very difficult, because only 5 to 6 stocks are carrying 80 to 90% of the weighting. That is why you can see Bank Nifty is more volatile than Nifty. Then why sudden moves in the index during expiry? That is also the same question, and answer will be the same. The sudden moves will be because of only these 5 stocks, that is the top 5 private banks. If those private banks give sudden movement on intraday charts or in any hour of the market, then index also can give you sudden moves. And these moves usually happen during expiry, because the rollover positions will be very high during the expiry. I'm not talking about the weekly expiry, I'm talking about the monthly expiry. And why stocks? We have like small cap and mid cap. That is already told. If there is a movement higher, then we have like small cap and mid cap. See, before going into intraday setup, I will suggest all of you to please write this setup for positional trading, because many people will not be having time to do intraday trade. They want to have a positional trade in the market. So that is why I give one. There are only 3 points to discuss in this webinar. Among those 3 points, this is the first point I already covered. That what are the stocks to see when you are trading in Nifty or when you are trading in Bank Nifty. Now my second point will be very important. That is how to do positional trading in Bank Nifty. As I said, everybody or anybody who want to have a positional trade, please write this point. First point is price should cross last 4 days high. Suppose today Bank Nifty closes 30,300. I'm just assuming 30,300. If last 4 days high is crossed and Nifty is likely to settle about last 4 days trading high, then you have to trade Bank Nifty trading long. This is the first condition. If last 4 days high is taken by Bank Nifty today, and if the price is sustaining about those highs, first condition is satisfied. This is for positional trading. This is not for Bank Nifty trading. This is not for intraday trading. This is for positional trading. First condition is price should cross last 4 days high. I'll give an example also. Second, both ICICI Bank and HDFC Bank should end at day high. That means the top two banks, the top two private banks which are having the highest weightage in Bank Nifty should end at the day's high or around the day's high. That means there is underlying strength in Bank Nifty. I will repeat once again. Whoever want to do positional trading in Bank Nifty, the first condition is the price of Bank Nifty should cross last 4 days high. Suppose last 4 days high is 30,300, 30,200, 30,100, and 30,000. The highest high of the last 4 days should be crossed. That is 30,300. If that value is crossed and if the price has sustained more than 15 to 20 minutes above that price, that means likely the short covering will happen during the day. I'll repeat it once again. Price should cross last day's 4 days high. Both ICICI Bank and HDFC Bank should end a day high or around it should be trading a day high. And third is first target will be the consolidation wick. What do you mean consolidation wick? I will explain in the next slide. And stop loss will be the consolidation low. And the most important is all conditions should satisfy. If somebody wants to take a positional trade in Bank Nifty, these 4 conditions, all the conditions has to be satisfied. That means you can't take a trade with only 2 conditions are satisfied, only 3 conditions are satisfied. That means price should cross 4 days, both ICICI and HDFC Bank, and the remaining 2 conditions will come after you take a trade. Now, give an example. So this is the trade. This is the last 4 days intraday candles of the Bank Nifty. See, these 4 days high is crossed today in the last one here. You can see this crossed and it has sustained about this. So I will take a down trade here. My stop loss will be somewhere I can see here. It will be consolidation wick. That means this will be my stop loss. And the target, this will be my stop loss here. This will be my stop loss. And my target will be this wick. That is the consolidation wick. That means 30,900 to 31,450. Around 600 points target will be from this point. So first condition is 4 days high should be crossed. Second is price should be above that. And next condition, both HDFC Bank and ICICI Bank should end at day high. Yesterday you can see ICICI Bank and HDFC Bank both ended at day high, and Bank Nifty has given a massive breakout. So these are the conditions if somebody wants to take a positional trade in Bank Nifty. First is price to cross 4 days, and second is ICICI Bank and HDFC Bank should end at day high, and then you have to take a trade. This is for the positional trading in Bank Nifty. Now coming on to the intraday trading, that is the main topic of today's session. Price crosses last day high. That will be the first condition. Price should cross last day high. Second, both ICICI Bank and HDFC Bank should be in positive zone. See here, my tone is different. I'm not talking about trading at day high or trading at day low. I'm talking about both ICICI Bank and HDFC Bank should be in positive zone. First is Bank Nifty should cross the last day high, that is the yesterday's high. Second is ICICI Bank and HDFC Bank should be in positive zone. There should be positivity in those stocks. Then first target will be last day consolidation zone. That is the width of the zone, and less stop loss will be the last day consolidation zone. There should be two conditions, price crossing last day's high, and both ICICI Bank and HDFC Bank trading in positive zone. That means, price these two conditions are satisfied, you can take an intraday trade. Now coming up to an example. See here, I have taken this initiative to differentiate intraday trading in two types of investors, in two types of traders, you can say. A trader who is aggressive and you can take risk, will buy on breakouts. And if a trader is defensive, if a trader wants to make a defensive start to the trading or defensive bet, he will always go for buy on dip. So what I have done is I have taken two types of trading indicators or trading strategy for two types of traders. First is for buy on dips, that is for the defensive traders. Second is for buy on breakouts, that is for the aggressive traders. If somebody is very aggressive, he will definitely go long even at day high, that is on breakout. If somebody is a defensive trader, he will never buy on day high, he will wait for some correction. So that is why I have divided this intraday trading in Bank Nifty setup into two. That is buy on dip strategy, that is for the defensive trader, and buy on breakout strategy, that is for the aggressive trader. Now buy on dip, it will be how to do buy on dip, see in the next slide, and how to do and buy on breakout, see in the next slide. See buy on dips. Now buy on dips means where to buy and what should be a stop loss. You always can see whenever there is a good movement in Bank Nifty, there will be some intraday correction. In those corrections, you want to buy. So if you are buying in those corrections, your stop loss will be last day's low. Suppose last day's low is 30,100 and today Bank Nifty is trading on 30,300, 30,400. After making a high of 30,500, if you are trading at if you are taking a position in mid of the day or in mid of the range, suppose around 30,300, what should be your stop loss? Your stop loss should be always the last day's low. It should not be today's low, because last day's low will be very important, because people who have taken BTSC, people who have taken longs in yesterday's trade, those stop losses will be the yesterday's low. That is why whenever you are doing buy on dip trade in Bank Nifty, always have a last day trading loss stop loss and target will be the last date high and more. I will show you the example. So this is the intraday trading candle. This is the last day. Hourly chart, and this is the today's first hour hourly chart. So you can see the market has opened higher. If somebody is a defensive trader, he will not buy at these levels. He will wait for some correction. So what is the correction you need to see is you have to draw the retracement level of the last day trading range. The last day's trading range was somewhere from here to here. What I have done, I have drawn a retracement for last day trading range for 38.2. Again, repeat it, please write down 38.2, 50%, and 61.8%. So if a trader wants to do an intraday trade in Bank Nifty today, if Bank Nifty has opened higher and if he is a buy on dip strategy guy, if he is a defensive person, what I will suggest that trader to do a buy on dip strategy, and for that buy on dip strategy, where to enter, he has to draw a retracement level. That is the Fibonacci retracement. So draw a Fibonacci retracement level of the last day trading range from the low to the high. Draw the range for 38.2% retracement level, 50% retracement level, and 61.8% retracement level. Now there is one glitch here. Now people will ask me where to buy Bank Nifty around these three levels or above these three levels. See, again, in defensive trader also, there are more defensive trader who don't want to take a risk. I want to have a very minimal risk. So if he is a mid aggressive trader, if he can take a risk, he can buy at 31,450. If you don't want to take a more risk, he can buy at 31,350. Still, if you don't want to take more risk, you can buy at 31,253. 31,253 is a 61.8 retracement level. 31,351 is a 50% retracement level. 31,449 is a 38.2 retracement level. Depending on the risk-taking capacity of the trader, a trader who wants to do buy on dip strategy in Bank Nifty, he can take this strategy. Whenever market opens, wait for 1 hour, don't take any trade. If the market open gap up, wait for some correction, wait for the correction till 31,450 or 31,351, 31,253, wherever you want to take the trade. So my condition is yesterday's market trading range should draw at retracement level, and a trader can take a position around these three levels depending on its risk appetite. Your stop loss will be this candle's low. That is the yesterday's low will be the stop loss. Either you take this here, either you take the trade here, or either you take the trade here. Or even one can do like this. If he's taking the trade around 31,450, there is a first retracement level. He can keep a stop loss of 31,250 as well. That is a 61.8 retracement level. So it depends on the risk taking capacity of the individual or a trader where you want to keep the stop loss. My ideal stop loss will be last day's trading low. Till last day's trading lows is not breached, if I am doing a buy on dip trade, I will hold that long trade. Right? If you want to take up intraday trade in buy on dip, keep the stop loss of last day's trading low. Either you can buy in around these three levels, that is at 31,450, 31,350, or 31,250. So this is how you do buy on dip strategy. Now coming to the buy on breakout. So this is a buy on breakout strategy. The only condition for buy on breakout strategy is the price should cross the last day trading high. I suggest to everybody to write this. The price should cross the last day trading high. That is the first signal that there is a breakout in Bank Nifty. And where you have to take a trade once that high is crossed. If an hourly close is above that, that is the first. If first hour close is above the hourly close around which the high is crossed. If that hourly close is above the last day high, then at that point you have to take a trade. Your stop loss will be 50% retracement level of the last day trading low, last day trading range. Your stop loss can be 31,250, your stop loss can be 31,350, your stop loss can be 31,450. Here your stop loss will not be days low because you are buying at breakout. Due to as you are buying at breakout, there is more possibility that the price is likely to move higher. If there is a real breakout, the price will never retrace back even to 50% retracement level, which is 31,350. If the breakout is real, it will not even cross 31,450 on the lower side. That is why whenever you are buying on breakout, your stop losses should be the Fibonacci retracement level, not the yesterday's. So again, I will repeat this. If you are buying on breakout, the first condition is the price should cross the last day trading high. In that hour, it should close above that last day trading high in that hourly candle. Once it closes, do take a buy trade, and your stop loss will be 50% retracement of the last day trading range. Here, 50% retracement level is 31,350. If you are taking a trade here, your stop loss will be 31,350, and you have to take a long trade. And 31,350 is the stop loss. What will be the target? The target will be the last this. The target will be the range of this low to this high. This low to this high will be the target, which will be the last day consolidation low. So whenever there is a breakout, the breakout will be very low. That is why people they more consider breakout trades, because if breakout has happened, many people have become bullish, and price is likely to move higher very faster. So again, I will repeat these two strategies. That is the intraday strategy. Once again, I will repeat this. There are two types of strategy in intraday. There is buy on dip strategy or buy on breakout strategy. On buy on dip strategy, your stop loss will be last day's low. You should write this. Whenever you are buying on corrections in intraday, your stop loss will be last day's low. Your target will be the last day's consolidation. The target will be last day's high or the consolidation bit. If last day high is crossed, either you can book it or you can wait for the second leg of rally. It depends on the trader to trader. Coming on to the second one, there is buy on breakout. Whenever you are buying on breakout, your stop loss will be last day 50% retracement level. If last day there was a 300 points movement, the 150 points will be your stop loss. That is a 50% retracement level of the last day, and your target will be the consolidation bit. Suppose in last day, the Bank Nifty has moved from low to high of more than 400 points. If that high is crossed today, you can see more 400 points movement in Bank Nifty in today's session as well. And your stop loss will be 150 points, which will be the last day 50% retracement level. So this is the chart. This is for the buy on dip strategy. buy around any of these three retracement levels wherever you are comfortable as a trader. My recommendation will be 31,350 in the middle, and your stop loss will be this low, and your first target will be this candle high. And above this, it depends on the trader where you want to move. But my first target will be this high. In the case of buy on dip strategy. In the case of buy on breakout strategy, if you are buying above these highs, your stop loss will be 31,350, which is the 50% retracement level. Till this 31,350 is not breached, you should not exit the trade. Ride the correction, ride the momentum on the higher side. If the bank Nifty moves higher and higher, you trade your stop losses to a near low wherever you are comfortable. But my stop loss will be 31,350. Till this is not breached in intraday chart, I will not go short or I will not exit the buying position. So these two things I have discussed on the long side. This can be taken out either on the short side as well. If you want to take it on the short side, you have to see you have to break below the yesterday's low, and you have to break below the yesterday's high. That will be the stop loss. It will be reciprocal in the case of short trade, because market is bullish right now. Market is going higher. Not discussing more about short trade and discussing more about long trade. If you want a short trade, then reciprocal, or you can say replica your condition. You should cross below yesterday's low, and your stop loss will be yesterday's high. So it's very simple. Only two conditions you have to satisfy, and you can take an easy intraday trading Bank Nifty. So only concern for me if I'm taking an intraday trade in Bank Nifty is stop loss and target. If a person is taking an intraday trade, what we do is generally entry in the market is very easy. Anybody who can come and sit onto the system, they can enter very easily into the market, but the exit is very difficult. So always before entering into any trade of Bank Nifty, specifically about Bank Nifty, always define your stop loss and target both. People, they define their target, but they don't define their stop loss. And many people, they define their stop loss, but they don't define their target. That is completely wrong. Whenever you are taking a trade in Bank Nifty, define your stop loss and define your target both, because you have to know where you want to exit and you have to know where you want to enter. You always have an entry and exit, and always have a particular target in mind and particular stop loss in mind. And again, this is not related to any intraday trade, just for your knowledge. In this webinar, I wanted to discuss only these two conditions, because once we will be taking more webinars in the coming days, and we will be discussing the next strategy, next leg, what you have to do once you are thorough with this trade setup. So just for your information, I will discuss something. Always have a close track on count figures, that is 30,000, 30,500, 31,000. Those will be the breakout levels. Always have a close track of those levels. Watch the open interest in the option chain of Bank Nifty. Track where is highest call and highest put writing, and track FIS derivative statistics. How to track it, how to do open interest analysis, those things we'll do in the next webinar. This is just for your information. Tools which can be used for the data, again coming onto the Spider, there are various things which you can use in Spider. Unique group formation, you can form your own group of stocks. Like I said, for HDFC and ICICI Bank, you can have a separate group for Spider. Use derivative summary report where there is a call addition, where there is a put addition. Use futures open interest scanner, which is there in Spider. Use option chain report, which is also there in Spider. All these four conditions, all these four scanners you can find in Spider. How to use this, how to go and take a trade, those things we'll discuss in the coming session. These are the things which you have to keep in mind. And mantra for making money, as I already told, data, correct entry, correct exit in loss, and correct exit in profit. All these four are the four money making mantra. You should definitely have in your mind. So this is about second session. What we will do in the second session, today it was only a short session on how to take an entry and exit in intraday in Bank Nifty. I will not discuss more, because we'll discuss slowly each and everything, how to trade in Bank Nifty in the coming session. So this session was only for two strategies, that is intraday trading strategies, which I have divided into two. There is buy on dip strategy and buy on breakout strategy. In next session, what we'll discuss is how to scan levels by scanners in Spider. There are various scanners which are present in Spider, which we can use, which we'll use in the next session. how to allocate funds, how to do trading, how to allocate funds in Bank Nifty, way to trade, how to do averaging and all, how to use derivative data in Bank Nifty, those things also will discuss. What are the derivative chains, what are the option chains indicating, how to make use of those options chain data that we'll discuss in the next Bank Nifty session. And the most important thing is the many people, what they do is they take a positional trading many of the stocks or many of the index, and those positional trades, many on one single day, what happens is due to some gap down or gap of opening, what you have allocated and what you have earned in intraday trading you will lose. So to avoid that, what we'll do is we will have a hedge strategy for overnight position time. Suppose there is a confusing moment in Bank Nifty today. If we don't know what will happen to Bank Nifty tomorrow, then how to hedge those positions, those things, we will see it tomorrow in the next session, that whenever it is allocated to us. So how to hedge your overnight positions, those things also we'll discuss in the coming session. So this is about today's session. I have not taken much time all of you. Once again, I discuss those two because those two are very important. See, one thing what I wanted to discuss with the retail traders or the young traders or the young people who are entering into the market this year. Always before going into the trade, going into any intraday trade or positional trade, always have a strategy behind your mind. Either if you are using your any other site, if you are using any other software, also always have a strategy in their mind. Don't go into the trade blindly. That we will go and buy. We'll see what will happen in the day, what will happen tomorrow, and what will happen day after tomorrow. Whenever you are taking a trade, take a trade with a predefined strategy. Always have your loss percentage in mind and profit percentage in mind. And my suggestion will be to use Spider software because I have been using Spider software from last 10 years. It is wonderful software that you can use to just track the technical indicators and even derivatives as well. So what I will suggest is, first of all, don't take a blind trade. If you are taking a blind trade also, then use some software like Spider or any NSE site to refine your trade and define your stop losses and targets. So don't take a blind trade, take a proactive approach and take a predefined strategy if you are taking any trade. So this is what I wanted to discuss today, and remaining things we'll discuss in the coming webinars.